Have you ever wondered what the wealthiest 1% are doing with their money that you not? It's a question that keeps a lot of us up at night. We see the headlines, the massive fortunes, and we think, what's their secret? Is it some complex formula hidden away in a vault? Well, today, we're going to pull back the curtain. I am going to share with you the core investment strategies that the top 1% use, not to get rich-quick schemes, but the proven, time-tested principles that actually build lasting wealth. And the best part, these aren't just for billionaires. You can start applying these concepts today, no matter where you're starting from. So, grab a notepad, because we're about to decode the mindset and the methods of the world's most successful investors. This isn't just about money, it's about financial freedom. First things first, let's bust a major myth. The top 1% aren't just lucky gamblers hitting the jackpot on some obscure stock. That's a Hollywood fantasy. The reality is far more disciplined and, honestly, a lot more achievable. The foundational principle they live by is this: they don't work for money, they make money work for them. This means they are masters of acquiring assets. An asset is anything that puts money *in your pocket, while a liability is anything that takes money out *. A fancy car is a liability. A rental property that generates monthly income, that's an asset. The core strategy is to relentlessly focus on acquiring income-generating assets. This shift in perspective is the single most important step you can take. Stop thinking about just your salary and start thinking about building your portfolio of assets. So, what kinds of assets are we talking about? The cornerstone for many of the wealthy is investing in businesses. Now, you might be thinking, I can't afford to buy a whole company. And you don't have to. The stock market is your gateway to owning pieces of the world's best businesses. But here's the key difference. The average person might buy a stock because they heard a hot tip from a friend. The top 1% invests like they are buying the entire company. This is called value investing, a strategy popularized by legends like Warren Buffett. They do their homework. They analyze the company's financial health, its management team, its competitive advantage, and its long-term growth prospects. They aren't trying to time the market's ups and downs. Instead, they buy great companies at a fair price and hold them for the long haul, letting the power of compound growth work its magic. They're business owners, not stock traders. The next pillar of the 1% strategy is diversification, but not in the way you might think. Many financial advisors will tell you to diversify by buying hundreds of different stocks through a mutual fund. While that's not necessarily bad, the truly wealthy take it a step further. They diversify across different asset classes. Class. This means they don't just own stocks. They also invest in real estate, private equity, bonds, and sometimes even alternative assets like art or precious metals. Why? Because different asset classes perform differently under various economic conditions. When the stock market is down, their real estate portfolio might be thriving. This strategy isn't about chasing the highest returns. It's about managing risk and creating a stable, resilient portfolio that can withstand any storm. It's like building a ship with multiple watertight compartments. If one area takes on water, the rest of the ship stays afloat. Now, let's talk about a strategy that might feel a bit counterintuitive: embracing illiquidity. What does that mean? The public markets, like the stock exchange, are very liquid. You can buy and sell shares in seconds. But many of the best investment opportunities aren't publicly traded. Think about investing in a startup before it goes public, or buying a commercial real estate property. These are illiquid investments because you can't easily cash them out. The wealthy understand that this illiquidity often comes with a premium higher potential returns. They are willing to lock up their capital for several years because they've done their due diligence and believe in the long-term value. This requires patience, a long-term horizon, and the ability to not need that cash tomorrow. It is a key reason their wealth grows exponentially, while others are just trading in and out of liquid stocks. Another crucial habit of the top 1% is their obsession with minimizing taxes and fees. This isn't about illegal tax evasion. It's about smart, legal tax optimization. They understand that every dollar paid in taxes or management fees is a dollar that is uncompounding for them. They utilize tax-advantaged accounts, like 401ks and IRAs, to the absolute maximum. They structure their investments to take advantage of long-term capital gains tax rates, which are much lower than income tax rates. They also pay incredibly close attention to the fees on their investment funds. A 1% difference in annual fees might not sound like much, but over 30 years, it can consume hundreds of thousands of dollars of your potential returns. They treat every single percentage point with respect because they know it represents their future wealth. Let's move on to the mindset. The wealthiest investors are masters of their emotions. The stock market is a roller coaster of fear and greed. When the market is crashing, the average person panics and sells, locking in their losses. When the market is soaring, they get greedy and buy at the peak, right before a correction. The top 1% do the exact opposite. They see market downturns not as a crisis, but as a massive opportunity, a sale on great assets. As Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." They have the emotional discipline to stick to their long-term plan, ignoring the short-term noise and media hysteria. This psychological fortitude is arguably their most powerful asset. They trust their research and their strategy, not their gut feelings in the heat of the moment. So, how can you start implementing this? First, automate your investing. Set up automatic transfers from your paycheck directly into your investment accounts. This pay-yourself-first method ensures you're consistently building your asset base. Second, start your education. You don't need a PhD in finance, but you do need to understand the basics of what you're investing in. Read books by legendary investors like Benjamin Graham, Peter Lynch, and of course, Warren Buffett. Watch documentaries, listen to podcasts, and never stop learning. The top 1% are perpetual students of the game. Third, create a written investment plan. Define your goals, your risk tolerance, and your strategy. This document will be your anchor during turbulent times, reminding you why you started and keeping you from making emotional decisions. Finally, one of the most powerful strategies the wealthy use is leverage, but they use it wisely. Most people think of leverage as dangerous debt, like credit card debt. The wealthy, however, use good debt to acquire more assets. A perfect example is a mortgage on a rental property. They might put down 20% and borrow the other 80% from the bank. This allows them to control a large income-producing asset with a relatively small amount of their own capital. The rental income then pays off the mortgage and provides them with cash flow. They are using the bank's money to build their own wealth. This requires careful calculation and risk management. But when done correctly, it can dramatically accelerate the wealth-building process. It's about using other people's money to make your own money work even harder. To wrap it all up, the secret strategies of the top 1% aren't really secret at all. They are principles of discipline, patience, and continuous learning. It's about shifting your mindset from being a consumer to being an owner. It's about acquiring assets, not liabilities. It's about playing the long game, managing risk through smart diversification, minimizing costs, and mastering your own emotions. These strategies don't promise you'll become a billionaire overnight, because that's not how real wealth is built. What they do promise is a proven, sustainable path toward financial independence. Start small, stay consistent, and let the power of these principles transform your financial future. Thank you so much for joining me today. I hope this has given you a clear roadmap and the inspiration to take action. If you found this video valuable, please give it a thumbs up, and more importantly, hit that subscribe button and ring the bell so you don't miss our next video. I'd love to hear your thoughts in the comments below. What S1 strategy you're going to implement first? Thanks again, and I'll see you in the next one.